Calculate your bill for Biden student loan forgiveness if you live in one of the 7 states that may tax it. If you expect relief from Biden's student debt forgiveness of up to $20,000 in student loans, you may be subject to state income tax, depending on where you live. According to a Tax Foundation research, 7 states: Arkansas, California, Indiana, Minnesota, Mississippi, North Carolina, and Wisconsin may tax Biden's student loan forgiveness in the future. It is contingent on states adhering to federal rules, particularly a clause in the American Rescue Plan of 2021 that makes Biden's student loan forgiveness federally tax-free until 2025. Things might likely change for the states that don't adapt, said Annette Nellen, a CPA and spokesman for the California Society of Certified Public Accountants. There will be some pressure. The operation of state income taxes. While some states levy a flat rate for income taxes, others use a progressive system that increases your rate as your earnings increase. According to Larry Harris, Director of Tax Services at Parsec Financial in Asheville, North Carolina, state taxes often begin with your federal taxable income or adjusted gross income. According to him, state tax returns then make adjustments or subtractions before multiplying your income by the state's tax rate. Of course, the $10,000 or $20,000 in forgiven student debt must be reported as taxable income. How to calculate your state tax obligation. For a fast approximation in a flat tax state, Harris suggests multiplying the Biden student loan forgiveness amount by the state's income tax rate. But it's more difficult in places with graded rates, he says. For graduated rates, Harris suggests plugging 2022 figures into the computation from your 2021 state tax return to get an idea of where your income would fall. It's not exact, but it'll give you an idea, he remarked. How much you could owe for debt forgiveness. The tax rate, as a general rule, only applies to the share of income that fits into each bracket. In some cases, you may also need to consider municipal income taxes. Here's a breakdown by state. Arkansas. According to an Arkansas Department of Finance and Administration spokeswoman, state taxes in Arkansas are based on your wages and range from 2% to 4.9% in 2022. Depending on overall taxable income, the taxable amount on $10,000 in student debt relief in Arkansas might range from $200 to $490, they added. California. California citizens have graded rates depending on taxable income, ranging from 1% to 30%, albeit the upper tiers may exceed the income restrictions for student debt forgiveness. For example, if a single individual has $40,000 in taxable income, the following dollar of revenue is taxed at 6%, explained Nellen of the California Society of Certified Public Accountants. Indiana. Because Indiana has a flat tax rate of 3.23% in 2022, borrowers can multiply that percentage by either $10,000 or $20,000 for an anticipated $323 or $646 in state tax due, according to an Indiana Department of Revenue representative. However, depending on their jurisdiction, Indiana citizens may also be required to pay county tax. Minnesota. The income tax rates in Minnesota are likewise progressive, going from 5.35% to 9.85% in 2022. According to a spokeswoman, the state's Department of Revenue is working on an example to share with borrowers. Mississippi. Mississippi will have no state income tax on the first $5,000 of taxable income beginning in 2022. According to the Mississippi Society of Certified Public Accountants, taxable income above $10,000 is taxed at a flat rate of 5%. Borrowers can estimate their tax due by multiplying 5% by $10,000 or $20,000 of forgiveness. North Carolina and C. According to Harris of Parsec Financial, with a flat tax rate of 4.99% in 2022, $10,000 or $20,000 of forgiven debt may result in tax liabilities of $499 or $998, respectively. Wisconsin. Wisconsin, another state with graduated rates, has prospective tax liability based on income, with rates ranging from 3.54% to 5.3%. A single taxpayer with taxable income of $50,000, for example, would have a top rate of 5.3%, according to a Wisconsin Department of Revenue representative. If they have $10,000 in student loans forgiven, their taxable income would increase by $10,000, and their tax obligation will increase by $530 if they have no credits to apply against their burden. They explained. Be ready if your state offers tax relief. If you live in a state that may tax Biden's student loan forgiveness, you should be prepared and try to save the money, according to CFP Annette Nellen, founder of Planning for Progress in the Washington, D.C. region. Worst case scenario. You'll have additional funds if you save up the money, and student loan forgiveness isn't taxable in your state, he says. Better to be cautious than sorry, Miller said.